I want to hit now a couple of the big current environment macro factors and how it informs what you guys are doing before we kind of dive into your way of investing again in more detail in a moment. We've been speaking for a number of months now building up to this, and I was struck even before this latest conflict broke out. You were comparing the current environment to the 1970s.
Well, I think there are really two pertinent decades or periods of time that you could look at in comparison to the current markets. One is the 1970s, and one is the very early 2000s, which would have been the popping of internet bubble 1.0. And I think there are some similarities with one and some similarities with the other. I'd start out with some basic factors, the first of which is market concentration. So you've had incredible market concentration in equities with a handful of stocks really leading the charge. There also are, very long-term implications of rate shocks and rate hikes. Each one was cut prematurely. The end of the 1990s decade was sort of the end of a, decade-long period of inflationary environment in the U.S. with a risk-free rate of 5 or 6% there. And it just took a very long time for that to kind of burn off in terms of the implications.